Hi everyone, let's go over my medium time frame and micro bearish Elliott Wave scenarios on Bitcoin, starting with the first medium time frame bearish scenario where we are looking for a zigzag to the downside ABC, where the most common target for wave C is between the 1 and the 1.236, which is between 27k and 26.3k. Now, because this first move to the downside here is a zigzag, a nice three-wave structure, we are then looking for a diagonal to the downside, an ending diagonal in a wave C. That also means that all the waves in this diagonal have to be zigzag structure. So each wave has to be a three-wave structure to the downside, being a zigzag. But that also leads to a problem, because if this is the most common target area of a wave C, then with a diagonal, we are never going to reach that most common target area because of the length of this wave 1. Because in a contracting diagonal, which is by far most common, wave 3 has to be shorter than 1 and 5 has to be shorter than wave 3. But the target, maximum target for wave 3 before invalidation is this 1-to-1 over here, taken from the high to the low of 1 to the current high of a potential wave 2, which is sitting at 28.2, 28.3k. And if this is then a wave 3, then this wave 5 has to be longer than wave 3 to reach the common target area. So we do have a rare target for a wave C at the 0.618, but as mentioned, it is a rare target at 28.1k. And also there's not too much support over here, so that doesn't really put the probabilities in favor for a wave C to the downside already. It could mean that this wave B is not yet finished, and this expanding flat is only the first structure. Then you get a second and a third structure, where then I would be looking for the triple top that we have at 30.4k, because we have three highs here, 1, 2 and 3, for then maybe a liquidity grab and a move towards the downside. And that is then also what I'm looking for in this particular scenario, either in a WXY or an ABC. It doesn't really matter. It kind of leads to the same scenario where this wave B then has to go over there. In a WXY, we are looking for a three-wave structure in W being a zigzag. Then we have an expanding flat in a wave X. And because then wave W is a zigzag, wave Y most likely is then an expanding flat or a triangle. But I'm not really looking for triangles based on the price action that we have. And also it could still be a double zigzag, but then you want to see an impulse to the downside, which we didn't have. So therefore, the flat is currently the most likely option in the yellow count, being then a wave Y, where you're going to be looking for a 3, 3, and then a 5-wave structure to the downside, where for me again the area around the triple top is going to be very, very important at 30.4k for then maybe a swing failure pattern type of trade, grabbing the highs, closing below, looking for a move towards the downside. That could be very attractive indeed. Now for this wave Y, it could be nice for price to move to the downside over here, but that is definitely not a must, because this move to the downside is already enough to have an A, B target around the triple top and then a wave C to the downside. But based on the local price action and the length of this range, it is quite unlikely at the moment. We already go up to the upside, but at least it's a scenario we have to think about. What I would prefer to see is to at least take the key level over here at 28.9k. We have a double bottom, and also we have an untouched daily naked point of control at that level over here, 28.875, as you can see. So that could be quite interesting. And then we observe the reaction over there. Are we going to drop further, or are we going to move to the upside for then potentially that triple top at 30.4k? Now, if we think about the purple count, then we're thinking about a 535, where then wave B is not yet in, and this structure over here, this expanding flat, is only the first part of then a second structure and then a third structure. So then you have an internal three-wave count inside wave B for then a wave C to the downside, which then is an impulsive wave. So in both of these scenarios, we are looking for then an impulsive structure to the downside, because in a wave Y, it's a expanding flat, which is a 3-3-5 wave impulsive move. And for an ABC, we're looking for B to end and then an impulsive C to the downside as well. So this area is going to be incredibly important if price can get that high. From a trading psychology point of view though, taking this low over here, I'm not so sure if that is great, because what is still down here, right? We had this low, we made this low. On other charts, this wick is not there. So you could say this low over here basically was a swing failure pattern of the low over here. But what is still down here? Because down here, we don't have a lot of support. My next great support area is all the way down here around 27K. And yeah, okay, we do have at least a volume profile of the very big range over here. But then the point of control is all the way down here. So that's like very deep compared to the low that we have. So with the scenario I just mentioned, with the expanding flat, it could be like okay to take this low, but then another swing failure pattern off this swing failure pattern you might allow that basically, but it's definitely not great to see this low being taken, because from a trading psychology point of view, what do the market makers or the institutions or whatever, what's still down here, right? The liquidity has kind of been taken. There's not much support. So preferably we're going to stay above this high. Above this low, and then we are going to have an internal three-wave structure before then continuation to the upside for potentially then that triple top. Because I do think if this low is going to be taken, if it is not a quick swing failure pattern move, like, probabilities if this low is taken are quite high for price to move towards the downside. If we then go to the micro scenarios here, and I have 3 scenarios for you that are maybe a bit like not really correlated with the medium time frame, because I've been actually focusing a little bit on what's happening here just on the micro in general. We have this 3-wave structure here in a zigzag in a W, potentially here 3-wave structure in a wave X, a double zigzag, for then eventually a Y to the downside. Now as wave W is then a zigzag, we could be looking for an expanding flat in Y, which then is an A, B and a C to the downside. Observe the reaction over here where we do have a bit of confluence with the time naked point of control and an order block over here. But of course we are responsible traders, we wait for the reaction, we don't catch knives, and if price wants to continue pushing on volume, it can do so. We still have a daily at 26.7k as resistance as well. So in this scenario, you then expect a move to the downside, hit that daily naked point of control, but also grab the double bottom over here for then potentially a WXY and then a move to the upside. Another scenario here on the micro is to first go down, grab that double bottom and the daily naked point of control, and then move to the upside to finish X. So we then have a W, a flat in wave X and then a wave Y to the downside. The problem here, first of all, is that wave X is very long in time compared to this wave W, which is not that nice. And also, if we already take the liquidity of this double bottom as well as the daily naked point of control and then go down again for a wave Y, it doesn't really make too much sense for wave Y to then find another like even more support here, because the support has already been taken basically. So preferably price is first moving up, then down, and then finds power or strength towards the upside instead of first going down, up, and then going down again, because basically the support has been taken. And then finally, we have this scenario where price could just continue pushing. We then have a W, and then in this wave X, somehow wave X then has to be finished. This is my lowest probability scenario, by the way. But then we have like a W, then wave X is already finished, and you're going to be looking for Y to the upside where price is going to take this high. Now, the reason this is my lowest probability scenario is because you can't really count any wave Y structure over here in a WXY. It's not a triangle, it's not a zigzag, it's not a flat. So it looks very much unfinished. And also, if the end of wave X would be here, then it is before the 0.382 fib time taken from the low to the high of W to compare the time it took to develop W with the time it takes to develop wave X, which is very rare for a wave X to be this short compared to a much longer wave W in time. So preferably, we're not yet done ranging here. And then wave X is going to be finished after the 382. That would be a preference. Now, if we look at the CVD divergences, then we do have bullish CVD divergences and the bearish ones. But the bearish one were counted over here. The bearish CVD divergence was counted by then bullish CVD divergences locally for then this push towards the upside. And as price is moving towards the upside, we can see some bullish CVD divergences coming as well. So over here you can see higher low in price, but a lower low on the yellow as well as the blue CVD, a bullish CVD divergence. And then while price is climbing here, you can see the yellow CVD line moving to the downside as well as over here, the blue CVD line. So there is some local bullish CVD divergences pushing price towards the upside. And if we zoom out, we also still have bigger CVD divergences over here, higher low in price, lower low on the blue CVD. So that one is also still active, as you can see over here as well, this one. So this one is still active, and we still have the bullish CVD here. So bullish, quite a lot of bullish CVD divergences, where then the target of this more local CVD divergence is this high over here. However, this CVD divergence was made with a candle on high volume, so that's not really preferred. This one is quite okay, even though it's the second divergence with this particular low. This low and this low already had a divergence, and this low and the higher lows was the second time this pivot had a divergence, but this more local one gives a bit more confidence for potentially a continuation to the upside, even though this one already played out as this high has been taken. So then finally, when we look at the probabilities of the different scenarios, then on the medium time frame, I am bearish. I still expect lower prices to come. Doesn't, of course, mean price has to do this, but as you saw, the triple top at 30.4k is definitely interesting. On the lower time frames, I'm very neutral, and actually on the micro, I prefer to first actually move towards the upside before seeing a move down, purely because of the support that we have. But I did write down micro range folder. I'm not really sure why, because of over here time and the support. So I think once the support is taken, I prefer to see a move to the upside. In a worst case scenario, this low gets taken with a swing failure pattern, and then you move to the upside. But this low, there's just not too much support. So if there's no swing failure pattern here, I expect a move to the downside. But I think that this scenario is quite interesting in a WX and an expanding flat in wave Y. It's just quite difficult to say really on the micro, to be honest, which I probably also noticed based on my talking here. It's just about what direction is going to be hit first, right? If we first hit the highs over here and then the lows, that would be nice for a three-wave structure, for then potentially a move to the upside if we take the double bottom and hit the daily naked point of control, right? That would be ideal. If we first go down, then we have to wait and see what the reaction is going to be, which I wrote over here as well. If we hit the daily naked point of control and grab the lows of the double bottom, then we have to observe the reaction as reactive traders, not FOMO catch knives. We just observe the reaction over here, and based on what we see, we can potentially enter for a long position. But as it stands, the preferred scenario on the medium time frame, though, if I do zoom into the medium time frame a little bit more, it is not the impulsive scenario to the downside. It is actually more of the corrective structure, where we still expect more upside to come before then a bearish move towards the downside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.